All right, let's make some sense out of this Bitcoin chart because we managed to get that little breakout up above the $53,000 level, basically right there. We saw Ethereum go above the $3,000 level as well, just shy of, just barely above that level as well, which is absolutely fantastic. But unfortunately, there wasn't any follow through for the entire crypto market since then. We've even seen the S&P 500 pull back a little bit, which makes sense, now that we're seeing crypto pull back as well. And to me, this is starting to put us back in the kind of sideways range, which is actually a very good thing from a trader's perspective, because this is where we can actually start to find some really healthy, clean trading setups. We actually saw something very similar with this range before, where we kind of had this kind of 42K area being a key kind of floor, and then an even lower floor at 40.7, right? And you can see how this is actually the case where the market basically did have two floors. We had a floor over here, which we respected very well, but then occasionally we had our kind of like backup support, and that's the way I would want you guys to think of it, is we are starting to kind of develop some potential, you could say, backup support down here, which is definitely quite interesting because it gives us some key points of failure on the chart where, as long as we're above those points, we're actually not doing too bad. But if we do drop below, that's where we can start to expect some much bigger drops to come in the market. And the reason that's interesting is because that's where a lot of quite easy money can be made. You see, if Bitcoin does end up dropping down, one of the big things I do want to show you is just a classic typical Fibonacci retracement. I mean, this is the same kind of thing I've been covering with you guys for a little bit on this channel. We've got a phenomenal lineup of indicators and tools showing us that the $44,000 level is potentially going to be a strong area for the Bitcoin price. If we take a look at this with the Fibonacci retracement, like I said, we've got that 618 retracement right here off this low up to today's high. And if we look at this on the EMA ribbon, for example, we don't actually have support anymore. It has actually moved up, so that's actually quite aggressive. But of course, on the daily Ichimoku cloud, we've got ample support right in this range, which is absolutely fantastic, even going into March, toward the end of March, which is definitely very interesting and very, very exciting for the bulls, because one of the things that shows bulls right now is that if things do pull back, okay, sure, you might be looking at like a $7,000 drop, which, I mean, it's going to be up to you how scared you are of that kind of thing. But if you're like me and you actually retain a sense of realism in the market, then you're going to keep in mind that, well, this is a straight fucking ride up. We're on the daily time frame here, and this is like one after another bullish candle with no break. I mean, even this was a bullish candle, even though it was orange, because we wicked to the downside and then recovered back up. So that's a lot of strength just like relentlessly being displayed. So naturally, we're probably going to have a lot of weakness on the way down, and that's kind of what a lot of people struggle to, understand or accept in these markets. But struggling to accept these kind of factors, these kind of natural laws of life of the market. Struggling to accept them doesn't make them false, and that's where you and I can start to make some really good money off these kind of things. So I'd definitely be interested in some plays all the way down here. This is a really nice 13% range, and I do want to highlight to you guys Deepcoin, which is linked in the description down below, because they are going to give you over $100,000 in bonuses and just $10 for free when you sign up using my link below. But what's also really cool is if you do deposit $100 and make trades worth 10K, which you can do in one trade, you're going to get $100 deposited back into your account for free. So literally whatever you do, they will double your account balance, and you can trade with that capital. Any profits you generate are yours to keep, so definitely check that out. Bybit is doing something very similar, but you're getting up to $30,000 as well, which is fantastic. And by the way, you can trade and sell, buy and sell shitcoins for free on Bybit, which is absolutely fantastic. You can do that to your heart's content. So really, really cool stuff there. Bybit is definitely the best in the game. Deepcoin is a brilliant no KYC alternative. Let's come back to the market though and talk about all of that in just a sec, because this is a beautiful, beautiful setup here if we do end up getting that pullback. But if we do zoom in and talk about what's actually kind of taken place over here, for me, I think what we are seeing is just another kind of typical sideways range here, which, if we're talking about kind of like bullish general market structure, this is really good. Like, even though we got that deviation up here, the fact that this wick didn't turn into a massive sell-off shows us that the bulls are still in control, right? And why am I saying that? Well, it's primarily because we're already in a pre-existing uptrend, and now we're doing something which is neutral. So neutrality being displayed in a bullish environment, to me, is basically just pausing the trend, getting ready, gathering yourselves a little bit of a rendezvous, and then getting right back into business, potentially with another pump. And that has actually been the kind of body language of this market for the last little bit, right? I mean, we did that, on very, very different timescales, right? I mean, we did this with a pre-existing uptrend here and then sideways for 7 months and then all the way up. We did that on a smaller time frame, but still definitely quite a large macro chart pattern. Let me just remove this fib because it's getting a little bit confusing, and remove these circles. One more. We also did it here where we had the pre-existing uptrend, traded sideways, deviation up here, deviation down here, and then continued on up, right? So there are a lot of really nice examples of this kind of chart pattern playing out, and it seems like Bitcoin is doing them in all sorts of different kind of time frames. In fact, you could even argue that this little bit of price action was the same thing on a very, very small time frame now. So this is absolutely great. It's also a little bit surprising, right? And the reason that it's a little bit surprising is because if you zoom out and take a look at this on quite a large time frame, you're going to notice that there's actually not much resistance for Bitcoin right around here. If we look at the VPVR and where Bitcoin's price is right now, there's actually a bit of a valley right here. So this should be where Bitcoin is going to have an easy ride up. And that's interesting. What I think is also interesting is the spot ETF net flows. I want to show you this on, let me see which chart to use. Let's just take this tab. And I actually just want to drag this up on, oh wow, I can't do it. How do I show this to you? Bam, there we go. The spot Bitcoin ETF total net flows showing us a positive value basically every day, and even lately $500 million going into Bitcoin spot ETFs. So there's still a lot of money going into Bitcoin's ETFs, but also kind of not that much. Take a look at this. I want to show you something which I actually mentioned. I was on Carl Moon's live stream just earlier today, and we were talking about this honestly quite briefly. It's not something I went into too much depth on, but one of the things I mentioned is that Bitcoin has a market cap of $1 trillion. Okay, so that's $1,000 billion, and so far, if I'm not mistaken, BlackRock and Vanguard actually own $10 billion worth of Bitcoin. Okay, so that is, if you've done the math, 1% of Bitcoin's total market cap belongs to those spot ETF holders. Now, I'm not going to go into too much detail on that, but that is probably the most bullish thing I have heard for crypto for the next few years. And you guys know I'm not like a fucking permabull. I'm not like jacking myself off to $100,000 Bitcoin or anything like that. I'm just not one of those guys. I'm more like you, right? I mean, we're a little bit more chill. We're more grounded. Yes, of course we want to make a lot of money, but we're not like married to these fucking coins or anything. We've got fucking lives outside of crypto. And so I'm not one of those guys that puts out ideas like this, And so I think that actually makes what I'm saying even more compelling, because to me, this BlackRock, Vanguard, and total market cap for Bitcoin thing is fucking huge, and I really want to go into it with you in greater detail. So if that is something that you think you want to hear me talk about, and especially why I think it's so bullish, mainly for the long term, then let me know with the comment section down below and tell me that you want the BlackRock Vanguard video. And if many of you guys do that, if many of you guys hit up the like button for me, I am definitely going to put that out for you guys relatively soon. So thank you all for your support, by the way. I really do appreciate it. We have been growing pretty nicely. So if you have been enjoying this content, then do me a favor and smash up those likes as we do go on in this YouTube video. We've seen really, really nice chart patterns lately. One more development that we've started to see in this market is with the dollar. We have seen a small dip with the dollar, which is interesting because we are continuing to maintain a positive correlation with the dollar, which means that when the dollar goes down, Bitcoin goes down, or in this case, Bitcoin pauses when the dollar goes down, which is still kind of the same thing to me because it implies, the trend kind of slowing down, and at the same time, the S&P is going down. So there's just a lot of weird shit going on. Gold is going up, which is a little bit more normal, I guess. But overall, things that usually make sense haven't been making sense. And I think that's one of the big reasons that crypto has exploded so high. But like I've been saying for a really long time, this isn't changing. I think that this is just way too much upward price action for way too long. The one thing that's starting to concern me now is it kind of feels like everybody is starting to talk about it. And one of the things that's actually very compelling in situations like this is that typically when the market is actually going to top out, what happens is that the last bears, the bears that have been bearish for a really long time, the capos of the world, they actually kind of switch sides. They've been bearish since 15K. They watch the price go to 20, to 25, to 30, to 40, to 50, to 53, and they're just like fucking on the sidelines the entire time, right? And like that's when those, and by the way, a lot of people that are like that are actually really smart. You look at like the IQ bell curve. People that don't buy things like Bitcoin are typically smarter. That's the funny thing. Like just in terms of like raw IQ power. Now, obviously, we don't really ask about IQ when you look at somebody partying on yachts with beautiful models and having a fucking Bugatti parked outside, right? Like it almost doesn't matter. No, it definitely doesn't matter if your IQ is like 120 or 140. But what you do typically see at the top end is that those people sound and are very intelligent, but they just don't make money. And and so, in a sense, you've got to kind of be like, yeah, sure, you want to be above average, but you want to be like almost maybe a little bit closer to the center, because then, you're willing to take risks. And that is often how things play out in the trading markets. There are exceptions to everything, but I just find that to be an interesting set of observations, because the people who I talk to are really bearish are really fucking smart. They're way smarter than me, way smarter than most traders I know, in terms of just understanding the world and general dynamics, yet that just makes them so risk averse. And what you tend to see is that when those people finally flip and they're like, yeah, I've been wrong, and I need to buy this asset now, that's actually when you kind of see the top in these markets. That's when the final liquidity which hasn't bought Bitcoin gets into the market, and then bam, you start sending it the other way. It's actually, I'm talking in extremes right now, but it's actually one of the most typical things you see, because a lot of you guys watching this video are also incredibly educated, incredibly intelligent people. I'm not just saying that to flatter you guys because I like you, but you are. Otherwise, you wouldn't end up on this YouTube channel. You'd be on another YouTube channel, because you just wouldn't be able to keep up. And yet what you've experienced, and I already know this because I'm the same, what you've experienced is that you've taken your really, really smart approach to this market. You've done a shitload of research. You really understand the game, and then things just go wrong for you, and you just can't make money, especially at the beginning. Like the longer you've been in the game, the more you kind of get used to it, and you start understanding the things that are different about being a trader, and you start to kind of get a hold of it. But toward the beginning, the first couple of years even, it is like that, and again, that's the kind of person who will end up kind of flipping sides right at the very, very end. What does that take? Well, again, potentially just another kind of pump to the upside, right? That's what deviations are. That's literally what they are. This is when the late people kind of flip to the other side, and then bam, we just send it to the other way, and then all of the bulls start going short, and then bam, we send it to the other way. And that's just always how things go. So that's exactly what I think we're in right now, and that's why I think that this is actually a very dangerous time in the market. I think there are phenomenal opportunities across the market at the same time. We've actually got Matic that just hit the $1 level a little bit earlier today, now starting to retrace. So a lot of these coins are kind of like at key areas of resistance. We've got Solana just dropping down now, which I think can definitely come down and revisit this kind of $80 level over here, for example, or definitely at least the very low hundreds, which we're already getting quite close to, and so there's a lot going on here. There's actually going to be a link for you guys for a free $500 position on Bitcoin. This used to be a Solana link, but we've now got it for Bitcoin for you guys. So shout out to Bybit for giving that to you all. You've just got to sign up, start trading using my link in the description to Bybit, and you're going to get a free $500 Bitcoin position, which is absolutely fantastic. I have to note that if you already have an account, then you're going to have to do a form to transfer under me, and if you've already been referred to Bybit by somebody else, you're going to have to make a brand new account, and you can use like a different KYC document, and it's going to be completely fine, and you'll still have access to this promotion. So that is super, super cool. But like I said, if that's not your thing, check out these alternatives. They're both phenomenal. BingX actually allows you to trade traditional finance. So that's really cool. You can trade Tesla and Apple and stuff like that, which I think is very, very exciting, especially when crypto is a little bit more boring. If you like to keep yourself kind of on the ball a little bit more, keep yourself sharp, that can definitely work pretty well. So that's something interesting that I'm seeing. I've actually just noticed an M pattern as well, a kind of double top take a look at this right here. If we're on the 4-hour time frame, this was actually just a wick, and we've started to form a bit of a double top pattern, which is usually pretty bearish. So this is my point, is that if we do start to see a kind of break, one of the things I'd love to see is that, yeah, we do end up dropping down, but then we kind of like get that kiss of death, and then really send it and just absolutely drop like a rock. Like that would be the safest, healthiest way to drop down. I don't know if we're actually going to get it, but if it does drop now, the thing you got to keep in mind is that if you and this is a basic TA concept, we go over it in the Four Flies Academy course, which most VIP members get for free when you join, and you can do that by following these steps on screen. Super simple. One of the things that I think most people don't even know is that if you've been in a range for a long time and then you start kind of like continuously testing the same support area, that makes it very likely that you're actually going to break that support area, because what it means is that you've had a lot of time to send it higher, you've failed to take that opportunity, or maybe you had that opportunity but it didn't materialize, which is what happened over here, and now you're just kind of consolidating at the bottom, showing in terms of like that body language again of the market that you're actually stuck quite low. That can be a very telling sign that things are about to start tumbling lower. What that translates to in this particular instance is, when you get this kind of bounce off the bottom, you want to return back to the highs without coming back down anytime soon. And the reason that's important is because if you do come back down soon, then that's a sign that you had a massive opportunity for the bulls, you came all the way down and you haven't been able to do anything with it, and now you're already back down to the same area of support, right? That's a really telling sign that things are actually going quite wrong in the market. I've got to repeat that again, because I actually think this is absolute gold dust, and you've actually got to just rewind this video and maybe even take some notes if you found this useful. If you do find that you come back down to the bottom of the range, but you're not able to muster a good bounce, you're not able to stay above the level for a long time, and instead you revisit it quickly, or maybe you come all the way back up but you're right back down straight away, anything that involves coming back down to the support area quickly implies weakness. It implies an absence of strength, and an absence of strength is of course weakness. So to me, if we do end up coming back down here, that's going to be a massive warning shot that, we've now been consolidating for a good amount of time. If we were going to pump, we should have by now, especially considering, like I said, I've shown it to you on this chart right here, like Bitcoin doesn't have any macro resistance from what I'm seeing, right? So it should be able to rise by these next couple $1,000s up to the $55,000, $56,000, $58,000 areas, which is where I anticipate the next set of challenges to be for Bitcoin. And the fact that we're just kind of struggling here is a sign that there might actually be, even though we're sideways, which is still, in an uptrend, which is, if we're neutral in a bullish environment, it is bullish, even though that's the case, it's all about understanding that these things are on a spectrum, right? And there's, shifting probabilities, and that's all we're trying to do. We're not trying to be fucking Superman and catch 100% of everything and like snipe the bottom and snipe the top and everything like that. It's completely unrealistic. And if you try doing that, then good luck. But also consider a membership at a casino, because you'd probably be just as well off. But instead, if you start looking at this stuff in terms of probabilities and you're just trying to skew those odds in your favor as much as possible, then all you're doing is taking calculated risks, and that's actually a lot easier to digest as somebody who's a more kind of logically minded person. So that's something I'm going to be keeping an eye out for. If we do end up coming back down, that's going to be very, very telling. And of course, it's probably going to mean a bit of a disaster for the altcoin market too. Bitcoin's dominance right now actually favors the bulls a little bit in terms of altcoins. We have actually, kind of hit this area of resistance again and kind of fallen out of it, which is definitely a sign that we're ready to take a little bit of a dip back down, maybe to this 41.9 area, or maybe even lower down to, 51.9, or maybe even just down to 51. But at the same time, you can also view this as a bit of consolidation happening within an uptrend, which is the same thing as Bitcoin right now, but Bitcoin's dominance chart is a little bit more basic and a little bit honestly easier to analyze because of that. And really all this is showing us is that we had a very nice bottom, a cycle in terms of, chart patterns and stuff, like a fucking quadruple, quintuple bottom. And now we've come up and we're starting to consolidate at an area which we already knew would be a resistance for Bitcoin's dominance, potentially getting ready to break up. So, I really wouldn't be getting too cocky right now in the altcoin market. I mean, they could move higher, and if they do, they're probably going to move by a lot, because it doesn't take much to move these coins. But in terms of, being in a danger zone, I mean, this is incredibly high. And one of the things that happens is that people who take risks inside of danger zones, who take risks in stupid ways inside of danger zones, they might actually make money, because you can be stupid and make money in crypto. But a natural byproduct of being stupid is that they're also going to lose it later on, and so that money doesn't stay. And you very rarely have exceptions to that, because the same level of stupidity that made you the money is going to stick with you after you've made the money, because you're not going to feel like you're less stupid, right? After you've made money, you're going to feel actually more confident. You're going to stick to the same kind of thing, and then that's how you kind of really blow things up. So I'm always looking for that more kind of middle of the road, very calm, collected approach. Like I don't want to be seen. I don't want to be heard. I'm just going to make a bunch of cash and fuck off and like not even be involved. And obviously that's the best way to play these games, and that's why I'm coming at you guys with these perspectives. So there you go, ladies and gents. I hope you have enjoyed this video. You know exactly what to do. If you have, definitely make sure to hit up that like button if you haven't done so already. Make sure that you are subscribed and that you've got the bell icon checked. And of course, take advantage of the beautiful links down below. Like I said, there's a Bybit position link right now for Bitcoin position link for Bybit down below, so you can definitely check that out. And if you're interested in alternatives, then these are two phenomenal options. And like I said, Deepcoin will double your $100 deposit if you just trade worth 10k. So that is super cool. I know it sounds like a big number, but like I said, with leverage, that is possible inside of just one trade. All right, ladies and gents, thank you all so much for tuning in, and I'll see you all in the next one. Cheers.